All right, everybody, this is John. Welcome to the free video. Let's take a look at the spiders. So, lot of bearish action out there. So why isn't the market crashing? I mean, inverted yield curves. Look, the news is bad, right? So, and if we look at this monthly squeeze, so the last monthly squeeze here, of course, this set off, the red one fired here, and the black one fired here. This set off one of the funnest rallies in the history of trading. And from a monthly perspective, we've come down. We tested the 55 EMA, right? That's kind of normal. We're currently kind of, trying to get going here. Now, what's interesting here is that, yeah, this is negative, but is this going to turn and rotate higher? And if we come over here and we look at the weekly chart, and this is pretty bullish, and I believe we're actually through this downward trend line. And so you might be wondering, it's like, John, why are you talking the potential that this thing could go up? Haven't you been reading the news? Don't you know that the yield curve is inverted? Don't you know that we're coming into this horrible recession? This is going to be the 2008 all over again. I absolutely disagree with that. So I'm not saying that. I don't think we're going to new highs either, by the way. But look, just from price action, here was a head and shoulders top. And when was this happening? All the news here was great. It was amazing. It's like put it all in crypto and tech stocks, and you live forever. And obviously, and the S&P is a much more modest decline than what happened there. All right, so that was all good news. There wasn't really a lot of bad news. Here, there's a bunch of bad news. It's horrible news, but now we got just the opposite. Okay, head and shoulders reversal. We're through the upward trend line here. The reality of it is, from what I'm seeing, is that the bad news is priced in, and we're now in a trading range, and we're going to be in this trading range for maybe 6 more months. I think we're going to test the upper end of this trading range. I think we have the chance to come down and test the lower end of the trading range maybe later in the year. But ultimately, in the short term, the weekly chart is incredibly bullish here, and I just wouldn't want to fight it. All right? All right, I got a lot more to cover in the premium video. Just want to kind of keep that in mind. Obviously, for Wednesday, we're going to have Powell coming out. I've heard talk that hedge funds are, short bonds because they think interest rates are going to explode higher. Anytime I hear a rumor like that, quote unquote rumor, I just think it's horse caca. Why would anybody tell you what their trade is? Okay, they're only telling you that so that you'll do it, and then they'll take the opposite side of it. So anyway, that's what I'm thinking. Hope it helps. Have a good one, and we'll see you at the next update.
Hey, John here with Simpler Trading. Thanks for watching. If you enjoyed this video, comment down below and let us know what topic you want to see us cover next. Also, be sure to subscribe and click the bell icon so you can get notified when we release new videos. And if you want to watch us trade in real time using our own money, go to simplertrading.com and learn how to sign up. Good trading, and we'll see you next time.